American Express reported its second quarter earnings and they topped expectations. Now, the credit card giant focuses on wealthy customers, and that has helped it remain resilient, even though consumer confidence has been shaken by the tariff war. Let's get more from Gustavo Gala, Senior Equity Research Analyst at Monness, Crespi, Hardt Co. Thanks very much indeed for joining us.
Hey, good afternoon.
It's great to have you here. Remind us just how does American Express make money? It issues cards. It obviously earns fees from retailers, but how else does it actually turn a profit?
It's loan book, right? So increasingly over time, it's turned from just mainly spend and lend. You have the loan book, and then you have the discount rate that you make every time a card is swiped. It's increasingly over time turned towards the loan book. They've had good growth in the actual loan book. If you look at the credit quality, it's improved over time. The print today, the actual billed business growth, if you look at the U.S., slowed sequentially 20 basis points, right? If you consider first quarter versus second quarter, you had a artificially slower first quarter because of the leap day effect. The street was kind of expecting that to pick up in 2Q. That did not materialize. More concerningly, if you look at the balance between goods and services versus travel and entertainment growth, travel and entertainment growth was slower, and that's kind of a rarity. Within that, airlines was flat, lodging is softening, and that was in the low single digits.
They skew high end in their customer base. Why is that? Why do higher income customers tend to go with American Express?
Well, if you look at the card, the fee-paying product, think of the platinum, the gold product, you get a lot of value out of it, be it access to the lounges, which they have 30 of versus their closest competitor has about 8 or 9 of them, that being Chase, JP Morgan Chase, right? They built something pretty unique. When we were positive on the stock, in the restaurant vertical, if you consider millennial and Gen Z, this age group spends more in terms of restaurants, think of order out. They bought the Resi value proposition, and basically you're able to get exclusivity in terms of tables. And that being such an important category, that matters.
Yeah.
So that would be,
Sorry to interrupt, Gustavo. I love those airport lounges. They make the old wait a lot more pleasant. Now, correct me, how do they differ then from a regular credit card, an American Express card?
So Amex is one of the few where it's its own closed loop in the sense that they are the issuer and in the sense that they also have the relationship with the merchant. So when you swipe an Amex card, it rides on Amex rails. When you're swiping a Visa or a MasterCard, that's not the exact question you asked. Those run on different rails. So the difference really is the exclusivity of some of the benefits you're able to get. If you look at what the cost is annually of the Platinum card, $695, you're getting $2,000. You're getting multiples of that in terms of value, right? So the dream for this company over the longer run is to continue. When they grab a customer, they're able to grab vast majority of their spend annually of this high income customer. They're able to deliver experiences and rewards that other, more basic propositions can't. But if they're able to expand the lend relationship, that would be good. And then you got to consider the international vector of growth, where they've got, they're trying to get the parity in terms of the endpoints for merchants. So density in the key cities in Europe would be one of those things. And the opportunity abroad, if you think about banks, the ROEs in a lot of these geographies, just based on the interest rate structures of these economies, could be highly accretive. But, there's not credit scoring to the level there is maybe in the more developed economies, right? This is not yours, particularly in all the regions they're developing into.
Let me ask you one last question. You mentioned the loan book. Is that essentially customers who've run up a balance that they haven't paid off?
So historically, it's been revolvers mostly, but now there is a portion that's increasingly people that are running some kind of a balance. But if you look at American Express's delinquencies, net charge-offs, they are industry leading. In terms of provisioning each quarter for like reserving for losses going ahead, they're very conservative. We're not, in terms of our outlook on the company, we're not worried about the loan book souring. It's a question of the multiple being very rich and expectations needing higher expectations being pushed into the numbers. And the ability to meet those is, increasingly difficult.
Gustavo, thank you very much indeed. I really appreciate it. Sorry, we were out of time. Your rating on the stock, though, neutral. You feel the good
Yes,
news is in there right now?
Yes, we downgraded earlier this week to neutral. We feel like the good news is in the stock. It basically needs an inflection point positively for it to deserve that higher multiple.